Hi everyone, I'm Eamon, Sarwa's VP of Investment and Advisory.
And I'm Akshay, Senior Wealth Advisor at Sarwa. And welcome to our video series on options trading.
Today we're going to cover the basics of options trading to help you better understand what options trading is.
An option is a contract that gives you the right but not the obligation to buy or sell an asset at a specific price before a certain date.
So it's like giving someone the choice to make a transaction in the future.
Exactly. So there are two main types of options you can buy, calls and puts. A call option gives you the right to buy a security, while a put option gives you the right to sell it.
So who exactly are we buying these options from?
Well, options are sold by sellers who are obligated to fulfill the contract if the buyer decides to exercise their option. The seller receives a premium for taking on this obligation. On Sarwa, you can also sell options, but this is a much more advanced strategy we'll cover later. For now, we're going to focus on buying an options contract.
Okay, maybe we can start by defining some key terms. What is a strike price?
So the strike price is the agreed price at which the option can be exercised. We've also got terms like the expiration date. This is the last day you can exercise the option. The premium is the cost you pay to buy the options contract, typically quoted on a per share basis. Since one contract usually represents 100 shares, the total cost would be the premium times 100.
Wow. I think I'm going to need you to give me an example just to make this a bit clearer.
Okay, for sure. So let's take a look at an example. Let's say you buy a call option for ADGM Incorporated stock with a strike price of $50, an expiration date 1 month from now, and a premium of $2 per share. Since one contract represents 100 shares, you'd pay $200 for this option. If the stock price rises to $60 before the expiration date, you could exercise your option to buy the stock at $50, which is below the current market price, making a potential profit of $10 per share. When you subtract the $2 premium, your net profit would be $8 per share or $800 in total.
Oh, I see. So then it's fair to say a put option is likely to be the opposite of that.
Yeah, exactly. So with a put option, let's say you buy a put for ADGM Incorporated stock with a strike price of $50, expiration date 1 month from now, a premium of $2 per share. If the stock price drops to $40, you can exercise your option to sell the stock at $50, which is above the current market price. The potential profit is going to be $10 per share minus the $2 premium, resulting in a net profit of $8 per share or $800 in total.
Not bad. Now, do I need to exercise the option?
So no, you don't have to exercise an option. If you decide not to, you can choose to sell the option itself before it expires. This way, you might still make a profit if the value of the option has increased since you bought it, without actually buying or selling the underlying assets.
Okay, looks like we're getting to the thick of things. Let's talk about what determines the value of an options contract.
Yeah, so when we're looking at the value of an options contract, it's made up of two parts. The intrinsic value, which is the built-in profit based on the difference between the current market price and the strike price, and extrinsic value, which is influenced by the remaining time until expiration and market volatility.
Okay, pretty clear now, but simple question, why would anyone want to entertain trading options versus just buying stocks?
Yeah, look, it's a very fair question. And options, they offer flexibility. You can use them to hedge your investments, speculate on the markets, and other movements too.
Sounds promising, but also sounds like there's some risks involved.
Definitely. If the market doesn't move as you anticipated, you could lose the premium you paid. Also, the value of an option can decrease over time.
I guess that's why it's crucial to do research and, of course, understand what you're getting into.
Yeah, exactly. So look, for more information on options trading, check the video description for additional resources. See you in the next video.